So if the broker thinks that by doing this, you're going to be able to distinguish yourself from all the other brokers, I think that they are extremely naive because there will be power users who can figure out how to do that on their own. I really think that at the end of the day, the brokers are all just going to have all these AI tools.
I think, and what AI is dangerous for a lot of retail investors is because AI sound extremely confident and very articulate. Is it good or not? That's a separate issue. But it's going to sound like it knows every single thing. And it's going to make you feel extra confident, and you may do a lot of stupid shit in that process.
Welcome back to Chills with TFC. I'm your host, Reggie, aka your Chief Financial Coconut, and today we are back in studio with another hot topic. These days, I think everybody is talking about it, and the topic is, can AI make retail investors better, right? So joining me, familiar faces, but I think for the benefit of everyone that is new to the show, maybe Chris and Thomas can introduce yourself for our audience that don't quite know you yet.
Okay, hello, my name is Christopher Ng. I'm a blogger and I have a YouTube channel called Growing Your Tree of Prosperity. Otherwise, I am an adjunct trainer with Temasek Polytechnic, and I also run the Early Retirement Masterclass with Dr. Wealth.
My name is Thomas. I'm the founder of steadycompounding.com, where I break down businesses. More recently, I'm an author of The Lunch Break Investor. It's going to hit the shelves Woohoo! August 18 in all the bookstores.
He's going to beat Teo Yo Yen. Straits Times
Different
Index.
topic,
Yeah, he's going to go higher than Yo Yen. Yo Yen, watch out.
I love the books, bro.
Yeah, bro's coming for you. But maybe before we start discussing the topic that we want, maybe share a little bit more about the lunch break investor. What are some insights and all that, just to titillate us a bit,
So this book is really written for those who have a 9-to-5 job in mind, right? It talks about how you identify great businesses whereby you can hold, and you don't have to monitor as much, because I think there are a lot of investors who came into the stock market after the pandemic, right? The pandemic, we saw a record amount of brokerages being open, but not many people know how to analyze companies, how to assess management, dial into earnings call, what to make sense of the financial numbers. So this book is going to cover all of that, and the key thing behind this system, behind this strategy, is that you don't need a lot of time to invest properly. Right, and that would, trickle down into your portfolio management, the kind of businesses you are looking at to help you grow your wealth.
Okay, and when any upcoming events, when is this going to drop?
Yeah, so it's going to hit all the bookstores on August 18. I'm going to have 2 book talks. One of it is going to be at Kinokuniya on August 18, and the other one is going to be on September 5th at Book Bar.
Confirm already?
Confirm.
Okay.
You confirm, then confirm.
Okay, confirm. We'll be there. Okay, we'll drop all of you update. We'll be doing a live over there, right? Yeah, we'll record and talk about the book. Hope to see you at the Book Bar. Okay. Kino also can go lah, but I will be at the one at the Book Bar. Okay, great. So we'll put it here, while stocks last. But I think besides that, there is a lot more discussion around the investing market, how things are changing and other. Okay, so today we're not talking about where are you investing and then all that fun stuff that we've done in many other episodes. But I think today we are trying to access some structural changes, right, in the way of how AI changes your access, the way you can play the game and all that good stuff. And you see more and more of the brokers and other platforms also integrating AI into their system. So I think all that we want to discuss today, right? So, but maybe before we go there, it would be great to kind of just have a lay for the audience to understand how you actually invest, right? What's your ideology? What's your usual process? So that kind of forms the base of how we then discuss. Yeah.
All right, for the fans of TFC, everybody sort of knows my fundamental philosophy. I'm a very, very boring investor. I focus on dividend yields. So if you want to characterize the portfolios that I build, they are highly focused in Singapore. They provide a very high dividend and they have a very low beta, right? And I've been doing this for over, 20 years? Yeah, and they've built a significant portfolio that pays all the bills within the family. So that's my life story.
Yeah, I think more than that. But yes, that's the base, okay? Right. Yes, and Thomas?
Yeah, for me, largely bottom-up investor. So the kind of companies I'm looking at is companies that's able to generate a very high returns on capital and they have a very long growth runway. So what I like to do is I always like these businesses to take over the effort of compounding for me. So once I buy into them, as much as possible, I don't like to touch them, right? I just let them do their thing and compound my wealth.
Okay, fair. So broadly, you guys pick the stocks that fit your parameters, what you're looking for. So you have to go through the whole process of research, sourcing and sieving down whatever companies that you want, and then deep dives, ultimately then deciding whether it fits your portfolio, right?
Yeah, that's right.
Broadly, I think that's the process, right? Okay. So with that as the broad base, maybe you can kick us off, right? Like, how is this AI thing changing some of the processes that you do in your investing process?
Okay, so maybe I will start. My process with AI, it's actually not straightforward. I don't use AI and prompts to make investment decisions. I use AI to write code. The code will generate a program that would eventually provide the analytics I need to make investment decisions, right? So that will require a little bit of software engineering skill. Like, for example, I need to build a database. The database must be able to receive data from Yahoo Finance and populate all the fields that I need, including balance sheet information, stock prices, right? Or above that, I have also coded some kind of Windows application that would ingest this data, and it's able to provide things like, your linear regression, clustering of these stocks, calculation of Sharpe ratios, returns and volatility, right? And recently I've also implemented a chatbot within this software that I can ask questions like, if I would want to rebalance this portfolio, what are the 3 stocks I should be looking at? And which 3 stocks should I rebalance to? And the software would automatically do an API call with an artificial intelligence and will provide the answer to me, sort of like a financial advisor, if you think about it. So it's a little bit complicated with many moving parts.
There are many moving parts.
Right, many moving
this
parts.
Is so much.
And in a nutshell, that's what I do.
Yeah, this needs a whole presentation around it. Okay, great. So maybe give us a bit more color, right? Like there are a few elements, right? So, okay, you create a code, to build a database, and then you kind of build on a certain layer of all these like compute elements to try to like calculate certain things that you're looking for, right?
Right.
And
so
then,
data is the new oil, right?
Yes.
So you need a way to collect the oil somewhere, and I place it locally in my machine. Now, on top of it, I would use this thing called a skills file or a .md file to derive some qualitative information from not just my data, but from various parts of a web. And that would generate one report for every single stock that I have in my radar, which is about 116 stocks altogether. It costs about $45 to generate all these reports, right? These are the token use that I have for my machine, right? And then on top of it, it is simply designing a program to present all this in a very nice way so that when I wake up in the morning,
you'll be happy to look at it.
I'll be happy to look at it and say that, hey, how is this stock doing? I update the research. After that, I look at the numbers, then I decide whether I want to add positions in that stock. So over time, this program grows with me. But this program is also very specific. It is a program written for one person. And I think this is how I see the future of AI and how people would process information. I no longer wish to buy, for example, off-the-shelf software. I can build it ground up just for myself.
Yeah. I think that changes across the board, right?
Yeah, across the board.
Yeah, even with this. Okay. And maybe just a little bit on the like API finance, Yahoo Finance data, right? Like, is it easy to get all these things, or do they cost a lot from a database standpoint, or like?
The truth is, if you don't want to pay money to get financial data, Yahoo Finance, or specifically the Python Y Finance libraries, is the only way you can get the information for free, right? But the information is also very dirty. There are some areas that you need to do a little bit of patching just to clean up the data. Obviously, there are better ways, and there are various websites that offer data for subscriptions of $150 a month to about $10,000 a month. That's like the Rolls Royce, where you can get expensive data for your system, but I don't pay for it.
Okay. And then how do you reconcile that? Because like the story is if the data is not clean, then whatever comes out is also not quite clean, right? So like how do you kind of manage that?
Yeah, actually this is what I teach to Polytechnic students. I teach data analytics, and they are given a CSV file, and the file is very dirty. They go through the process of cleaning every single column, filling out all the missing values. And there is a certain art to it. Like, for example, if there's a missing value in returns, do you replace it with 0 returns for that day? Or do you do linear interpolation between 2 points? Questions like that would come into the picture Yeah, so it's definitely not something like a beginning investor can do.
Yeah.
Right.
Yeah. I think I might drop off already 50%. By now, this is too cheap already. But okay. But I think broadly, people understand, right? It's just the execution. There's a lot more nuance to it.
Yeah, there's a lot more nuance.
And if you
to it.
actually get to that level, you will figure it out. I'm very sure, right? You will kind of like step by step. Okay.
That's right.
So Thomas, can you just give us some hope that it's not as cheap for yours?
So, I mean, I think like when it comes to investing, right, using AI has tremendously helped me cut down the time in, having to research all these companies. And I echo what Chris said, right? We don't use AI to make our decision. That mental faculty must remain with us. But what AI is able to do is that it's able to extract a lot of information for you and also crunch this, into useful tidbits for you. So one example I like to kick off my research process nowadays is every single company I research, right, will have a project on its own, right? So the AI I always use is Claude. I also use Gemini and all that, but the one I always go back to is Claude. So usually what I do is I'll kick off with Claude co-work first, right? So what I ask it to do is I'll ask it to go to all these investors' website to draw down all these financial documents first, right? Because I always want them to draw from the source itself. I think one biggest mistake a lot of retail investors do is that whenever they start their research, they just prompt directly, right? They just prompt directly. And then what AI will do is that AI will just either from memory or they'll go onto a website to crawl all this information. And a lot of time, this information will be wrong. So what we want to do is we want to make sure the documents, all these are sorted out and then name appropriately. So right, if it's transcript, make sure you label transcript, the time period, everything properly. Co-work will handle all this for you. Upload all this onto project. And then what you want to do is you want to make sure you query against the project files. Now, this will reduce hallucination by a lot, but it is still not 100%. It may still make mistakes. Another AI I like to use is Notebook LLM, right? Because that one is 100% grounded and is significantly way less likely to hallucinate. So the reason why I use Claude more is because its reasoning is a lot better, right? When it comes to Notebook LLM, there's no reasoning. It more or less is like a very, very fancy Control F. And what it can do is that, what I like to do is after I upload, onto Cloud and one onto Notebook LLM, I'm quite a visual person, right? I will get Notebook LLM to generate a slide deck out for me, right? To explain what this business is about to me. So in this way, I'm able to turn over a lot of rocks because investing is about, going through many, many companies until you find one that's suitable for your portfolio, right? So it really speeds that process up a lot, explaining how this business make money, how the individual segment has performed over the years and all that kind of stuff. Is able to, not just summarize all this, but also plot it into chart for you, right? And Notebook LLM is very, very dynamic, context window, extremely huge. So I think that's where a lot of retail investors can go and take advantage of this and amplify their research.
Okay. So from what I hear from you, right, it's not that you are really stopping at the very front part of the clunky research process, right? You manually find the right sources of information that you want, you put it into the LLM that you're using, and then it will study whatever information that you feed it, and then it will generate based on whatever you're looking for.
Yeah,
right?
So
broadly.
Another tip for all these retail investors is that one is rather than manually go and click and download all these documents, co-work can go in and do it for you. So you just tell them what to do, they'll go in, extract, and then you just got to upload it onto your project files. And then another thing is when it comes to prompting, I think you touched on a very important point. The prompting must be done in multi-step. You cannot one-shot everything, right? Then if you're going to one-shot everything, the quality of answer is going to degrade very, very severely, right? And so we want to do it The first question can be about, how this business make money? Then after that, how has the, company's KPI evolved over the time? Like, let's say Netflix, for example, was reporting subscriber numbers up till 2023. When did they stop reporting? Why did they stop reporting? Right? And the traditional way of this is to go through every single quarter's transcript to find what management say. But now you can just upload all the transcript and then they'll point you to where exactly it is. Right? And then it's able to tell you, without a story, is there any common theme over the years? Is management always giving you excuses? And that's where you want to go and dig. Right? So it's helping you find that needle in the haystack a lot faster.
But then do you move one step further to get AI to think for you? Because like whatever you were saying, right? Like there are certain things that you're looking for based on whatever it generates, right? So broadly, I just call it like you will generate a report based on what you're looking for, right? So after that, then you still got to read through all those things to then decide, right? Is there like a second step where you, based on what you are really looking for, you engineer another, you kind of like work with another AI to then, study all the reports that come out so that you let it think for you, at least up to a certain level before you make a decision, rather than like crunching more information to get a more exciting report, actually it goes further to analyze and all those.
Yeah, so I think that's a very interesting point because I think most investors, retail investors at least right now, they let the first thinking happen on the AI layer, which is not great because then your thinking will be anchored to whatever the AI is saying. And frankly speaking, whatever the AI is saying now is going to be the general consensus that's happening in the market because all these AI are not sentient, right? It is all probability. They're trying to guess like what the next response should be. And oftentimes it's going to be very based on what the what online chatter is going to say. And what's going to happen is a stock price is going to move a certain way. People is going to feed a narrative to the stock price movement. And that is what the AI is going to tell you. So if we let AI do that thinking for us, we are going to have very disastrous results because it's just going to echo the general consensus. But what I like to do is after I use it for research, after it flags out all these important insights and information to me, I like to write up my own thesis, right? Then after that, then I will feed these theses into AI to ask them to poke holes. Because writing is thinking, right? And if we don't write that thesis out, then we are totally not having any thinking at all, right? So that process is very important. So write first, then after that feed it in. That's where the higher level reasoning will kick in to be the devil's advocate.
Okay, fair. We'll get down to that. But Chris, do you agree with our lunch break investor?
I think it's good that both of us are on the panel together because my approach is almost the total opposite of his approach. And I think it's good because I believe that all approaches get us somewhere. And are
suddenly
good,
so
right?
PC,
Yeah. No, the reason why it's different is that for me, I'm not a believer in the narrative. I don't believe in stories, right? I'm a very hardcore kind of numbers person. So what I do is I instruct artificial intelligence to do things like do discounted cash flow analysis, perform an Altman Z analysis, give me the Petrosky score for a particular company. So we put everything on one report, and then finally I'll ask the question, based on the analysis that you have done, give me a bullish bearish case for the target price. And there is a weakness in that approach, in that if I were to do it in such a mechanistic manner, my artificial intelligence always has a value bias. So I know that when we talk about these value stocks, right, when you put your money in, you need a lot of patience for it to ride up. And a certain amount of my portfolio does that, right? But then the sector that's doing really well in Singapore are the tech companies, UMS, AEM. These are the companies that will not be captured by my artificial intelligence. So I sort of understand the weakness of my creation, and I sort of respect Thomas for being able to share the more narrative kind of approach. I think important thing is that we sort of understand that there are strengths and weaknesses of each method of using AI.
Yeah, but yours, you're going much further with it, right? You're essentially doing certain presets on like how to evaluate the companies.
Yes.
And then you let AI run through those presets on like evaluating on the company and then arriving at a case much further down the analysis already.
Yes. And the rabbit hole goes very deep because every time I read an investment book, I will tell my artificial intelligence to update the skills file with the material from my book. And so over time, the more books I read, the larger the skills file, the longer an analyst report. I could come up with a 75-page report on DBS that I would hardly read. I would go down to the bottom, I just find out what the target price is, what is the main rationale for picking the company. And I would have a certain amount of confidence as to why artificial intelligence arrived at that. Because it is like what Thomas said, it is prompt chaining, multiple chains of inferencing to arrive at the final target price.
So I broadly understand what you're doing, right? Very clean data sets at the front, and then you keep running through all sorts of analysis, and then you like take like 10 different ways to analyze, or 100 different ways to analyze a company, and then you just get the AI to do all the analysis across all the things. And that is the power of like artificial intelligence, the kind of volume that you can do, right? And then at the end it arrives at the cases for you, right? So you backtest everything.
Okay, that's not a backtest.
Okay, yeah.
That
so
is,
do you
using in the data I have on the database. The backtest is a separate program I did using artificial intelligence. And the beauty of a backtest is we could test 3 fundamentals, one over each other. And we could perform 3,100 backtests in 10 minutes. So at any point of time, I will know in the Singapore stock market, what are the fundamental ratios that perform the most effectively. So I can tell you straight away, if you screen for return on equity followed by free cash flow yield, you will come up with slightly better results than most retail investors. So these are the kind of insights that one man is able to build. But of course, I have training in finance and IT at the same time to build this backbone.
I thought Chris touched on one very good point that is applicable for all the listeners out there. Whenever he read a new financial book, right, he will upload it or share the learnings with the AI. And that is how the AI grow with you. And the more we use AI, right, the more it learn about us, the more it understand our framework, our principles, it is going to grow with you as your second brain. So the more you use, the better it becomes.
Yeah. So actually, I wanted to ask about that because clearly, Chris is using so many different frameworks to evaluate until I think he also even forget what are the frameworks already.
I don't know.
I don't know. So you really forget already. But you like Thomas, you do sound like your base is still pretty similar. The whole like value, trying to understand the company, bottom up approach, really evaluating the business. So that from the day I know you until now, I think that is a framework, right? And I'm not saying it's wrong. It is what it is. But I also want to understand, like, with the ease of access to some of these AI tools, right? And now AI can do all these other analysis, like what Chris has said. Have you incorporated some of these other frameworks of evaluating the companies into your overall evaluation system?
I think for some reason, right, the more intelligent that comes in, the more volatile the market, right? And I realized that, whatever the approach I'm using of trying to identify mispricing, all this, the opportunities set is coming up more often and more often, right? So
wait, what does that mean again?
Like, there's a lot of swings within the market right now. So the most recent one, right, we start to see the value gap between the Magnificent Seven go all the way to the memory stocks, right? Because a lot of their free cash flow is currently going to the semicon industry, memory players. And I think a lot of times, if we were to remain level-headed, a lot of times there's value to be exploited in this case. And these swings are getting heavier and heavier nowadays. Like whenever there's a new news that breaks out, things that I wouldn't do as a long-term investor, the market will react very heavily to it. And and it is always this window between intrinsic value and whatever the market is offering right now. That has always been the case, and I foresee, with the development of AI and all that, it will still remain to be the case. Okay,
so the swings are bigger, so then
it's way faster. It's way more often.
Okay, and then from your point of view, you're not changing the way you are evaluating the companies, right? Like you're not adding new philosophy. I mean, there's 101 names to these things. Yeah. So you're not changing that part, but you're observing that there are bigger swings, So when you use your way of evaluating, there are more opportunities because of the swings, right? Because ultimately it's about the price that you're entering at. Is that what I'm hearing?
I think philosophy, exactly right as what you said. That part doesn't change. Buy well, sit there, do nothing, and just let it grow. But what's changing?
He also buy well, sit there, do nothing, what?
Maybe the specific thing that we buy is different. Okay. That's basically it. Okay. I don't think there's anything wrong
later
with
we can
different,
add some context to that. Yes, please continue.
But the way we approach these companies, having AI is like having a very, very intelligent analyst there to, do all this a lot of heavy lifting for you. And I think it's great lah. VCs are subsidizing this so heavily right now. There's no way all these models that we are using right now, if the VCs are not subsidizing, the cost will be
Yeah,
astronomical.
cost will be astronomical. So then down the road, what will happen, right? Okay, yes. Later we can talk a little bit about it. But just so I round up this part, right? Because I'm trying to understand, is it because that, like for Chris, the kind of companies that you're looking for, because it's a dividend play, right?
Yeah.
You will consider them like very matured. There's no real need for storytelling, just
Yeah.
business fundamental strong, keep paying me the money, manage
That's
your
right.
costs well and good, steady. So
I'm like all the old men who go for the AGM
you are,
buffets.
you are. But nowadays don't have already. There was a time of buffets.
Yeah, we just want to buy at 6%.
Yeah.
Hold on to it for as long as we
Exactly.
can, right?
So,
and whoever sells it, maybe my descendants will end up selling it. That's my plan.
So is that because of the companies and the shares that you're investing in, so you can use this type of like this kind of AI where it really goes very far all the way to the end of deciding certain things. You're just really pulling the trigger and evaluating what the AI say before you pull the trigger.
I think we have to give a lot more credit to AI. It just happens that because I have this particular style, I use AI in such a manner. Maybe some people might find it perverse, right? But I also use AI to write code that measures momentum in stocks. And so I have a $20,000 to $30,000 portfolio that I buy for fun to look at all the stocks that are trending at the moment. So I at least talk to young people when to invest. So when the algorithm detected SNDK, SanDisk and all that doing well, I'm able to have a decent conversation with them. Yeah. And maybe tell them how naive it is. It's like almost like buying Bitcoin, Yeah.
That ends up in a short. Yeah. But because for context, right? So I think that's because of how you're investing, that's why this whole system can be built this way, as compared to like Thomas said, you are, I don't know, fair to say growthier, right? You're looking for like the stories, you're looking for like the next big thing, So it's a bit harder to just fully rely on AI in that sense. You have to have a bit of imagination. You have to take a bit of a risk bet on certain things. Is that a fair statement?
Yeah, I think it's more quantitative plus qualitative approach.
Okay. Then when it comes to the qualitative, right? Because quantitative, your database is quite clean, your frameworks are clear. At some point, it's not too difficult, right? So, but what about the qualitative? Because qualitative, since time immemorial, right, it's like it's everybody has something to say about it, But does AI help you, in evaluating the qualitative aspect?
Actually, I think that there's a certain savage beauty in doing very quant kind of work with AI, because AI, there is this thing known as a temperature settings for techies, right? If you set it high, AI has some leeway to be a little bit creative with its answers, right? So every time I get my reports built by AI, it's not purely quantitative, because AI will attempt to interpret it, right? And it would also find a way to maybe use a search API to find out what's on the web, to actually moderate the answers a little bit, right? So there is a story, but the stories tend to be a lot more numerically driven, rather than things like, this manager has this particular philosophy. He believes that this is how he should run that business.
I mean, you're just looking for 6% now. Okay, that's it.
I don't go for it. I
don't need a very complex philosophy.
Can you give me 6%?
Yeah. I need a track record.
Yeah,
more than a philosophy.
If you give me 6%, I buy. If you don't give me 6%, better things to do with my money.
Okay. Fair. Yes. For qualitative evaluation, because you were talking about like KPIs, management changing narrative, like all those things. These are things that in the past you really got to read and read. You can't just look at the chart. It's not going to tell you anything there, right? So like, how do you then how does that change the way you evaluate qualitative?
I think like it makes it a lot easier to compare what management say 5 years ago compared to what they have achieved today. Right, because often the best predictor for the future is what happened in the past. So, did they keep to their word? Did they overpromise? Are they actually candid with shareholders or not? Right? Or are they always giving you excuses, so and so forth? So what AI do is that it's gonna surface all this out, whether they change their strategy and then what's their reasoning for it. And oftentimes it's not just the transcript that we can build in. Right, when you want to assess management, we can also extract all the interviews from YouTube, right? All the transcript can all go in, and it's able to crawl through all this, right? And it's going to point you there, and then you are going to assess whether all this management, what's their caliber like, right? So that's the qualitative aspect that AI is able to do very well, but certainly not with letting them just tell you this is a good guy, this is a bad guy, that kind of stuff.
Fair.
But let them put up the pieces so that you can direct your attention in a more focused way.
Fair. That's why all your SGX CEO must come on the show.
Yes,
do the podcast.
Then got transcript.
Then got transcript. Then people can read and study you, right?
meet
Don't
the
hide behind
sniper.
the screen, right?
And meet the sniper.
Yeah, meet the sniper. Come on the IPO circle. Maybe we have something else for you, but must talk more than people know. Okay, great. So maybe a little bit on the limitations, because like we touch a little bit, but I thought we give a segment on it, right? So like, what limitations, or like, does it, the standard consideration is what if it hallucinates, it affects the outcome and all that, right? Or like there's a bias when you use AI, they bias to tag and all those kind of bit, right? Do you see that, and how do you kind of like manage that part?
Yeah, I mean, I thought like AI is going to be agreeable with you a lot of times, right? I was just reading a report from Stanford yesterday. 48% more likely to agree with you than a human would. So they are going to be the ultimate yes man, which is why it's very dangerous if we just prompt it and just let it make all these decisions for us, right? Then it's just going to be a giant echo chamber. And when we are investing, that's the last thing we would want. And what we want to do is we really still must protect that thinking for ourselves and not just let it run. Yeah.
Then from an incentive structure standpoint, then AI-A, which is one LM, will disagree with AI-B, right? Which is another LM. Because if you think from that point of view, because the incentive of the AI is to keep you engaged, right? They want you to be there, keep using it. And that's why they generally are more agreeable. I mean, that's what we are observing, right? But then the three AI can fight with each other, right? So that they get your attention, right? So like, do you kind of like make them do that, or do you build in some of these things where the AI, some people will say cross-check, some will say debate with each other, do you have some of these things, or you think it's redundant, you don't need that?
I used to do that, but more and more I feel like it's getting...
ROI very low.
Yeah, the ROI is it's like a lot of time wasted. But I did notice like what you mentioned, like if I don't say this is my idea, I say this is Gemini's idea, they are more likely to reject the idea for some reason.
Because that's the incentive, right? Between the AI, the incentive is to capture your attention. So generally, I should disagree with the other folk and then convince you that I'm correct, right? So, but you think that it's not worth it, like going through all this work and it's too much and not important.
I mean, I tried playing around with that before, but nowadays, like, no, I don't do that. I just go to one, especially with the Fable 5, it is a lot better at reasoning.
Okay.
Yeah, it has less of that agreeableness problem, but it's not generally available to everyone yet, right? Unless you go on like the max plan or something.
Okay, fair. Any thoughts on this? I mean, you build your own software, so it's not so...
Yeah, for me, the main issue is actually frugality, right? Because I obviously have access to Fable 5, but the token utilization is very expensive.
It's nuts.
So...
how much?
I think times 2 or times 3 Opus, right? And then Opus is like times 2 times 3 of Sonnet. I think there is a certain amount.
I tried to go on the usage before. Right. One prompt, $8.
Yeah. So what I do is that I write my own program so they don't use up any tokens. Where I were to perform a query over an API, I make sure I don't go further than, I think, Sonnet 5. Sonnet 5 is the furthest I'll go. And it's good enough. Yeah, you don't need that kind of brains.
So it's a cost consideration.
Yeah, that's very important, because if you spend more on tokens than your dividends, then what's the point, right? Yeah. Right?
Very good. We're just looking for 6%, right? We know our token cost to go home. It becomes 5%. Right. Then it defeats the whole structure.
Yeah.
Oh my God, I love that.
Yeah.
Okay. Fair. So I think recently I was emceeing for an event, also for an AI launch, right? And then I think one of the things that I did ask the panel, but of course, at this kind of big event, everybody is very nice and everyone's very friendly, right? So nobody will give me a straightforward answer, right? So I want to ask you all, right, do you think with the power of AI, and then I believe more and more systems will come in to make it even easier. Like you have to build everything from scratch. You already, like you familiarize, and then there's the system, and then someone else is going to create some template that you can just like plug and play. So at some point, do you think there's still need for like, human advisors, right? When AI can do all these things.
Thomas, you want to go first?
I think because
I prepared.
Sniper is a big jab.
Yeah, it's a big jab later.
Yeah, so I think human advisors solve a different problem. Whether they solve that problem well is a separate issue. But the problem they are solving is procrastination. A lot of people will not proactively go and think about their insurance needs, so on and so forth. But whether they deliver the best solution, incentives often is a problem. AI will not have that problem, but AI will have that procrastination problem. If I were to it's information is already available elsewhere. Like if you were to go onto TFC channel, if you want to know like what to buy, what to insure and all that, I'm sure there are some guest experts out there who already put the information out there, and you don't need AI to make all these decisions. You watch the episode, you take notes, you think about it. Actually, you can more or less know what to buy already.
Yeah, thanks for the plug. Yeah, the lunch break investor launch. He plugged me, I plugged him. Okay, 5th of September. Right?
5th September.
5th September at the book bar. We will be doing a podcast there. Come and look for us.
Yeah, so advisors solving a different problem. But AI would be able to give you that advice without the incentive challenge.
Okay. Yeah. Your thoughts?
I love Thomas's answer. You're very nice. So for me, when I was preparing for this question, it was very tempting to just say that yes, artificial intelligence can do all this. It would increase the capabilities of the retail investor, and it will reduce the need for financial advisors. But then I was thinking twice, because you need to really understand how Singaporeans are really using AI on the ground to see whether it really threatens a financial advisor's rice bowl. For one thing, if you have friends who are retrenched in their 50s, they go for a skills futures training. And they go on to LinkedIn and they build all this cringy AI slop, right? Or some of my students, I tell them, okay, produce an analyst report on the stock, and you make a decision whether you want to buy or sell the stock. What they would do is that they will take the output, feed it into AI, and say, should I buy this stock? They don't want to take personal ownership for the investment decisions, right? So everything boils down on prompt quality. If you are really at the level that you barely understand prompt engineering, or you think that you can learn prompt engineering by going for some 2-day skills futures course, financial advisors have nothing to worry about, because you're going to lose a lot of money and you end up getting a human being to come and assist you with your investments. And we don't know which way things are going to go. If you want to make money, or you want to somehow wean yourself off the financial planning industry, there is an entire learning curve that you need to go through. Prompt engineering, zero-shot, few-shot learning, prompt chaining, agentic architectures, model context protocols. You have to chain all this up together before you can credibly come up with something to say that, yes, I can let you handle a $2 to $3 million portfolio, right? So I really think that financial advisors, you would have something to worry about if our education system can change and we make it AI-centric. So kids know how to use AI. They know what to delegate, what kind of decisions they keep on their own. They know how to evaluate answers from AI. I'm still not seeing it in the industry today, right? So surprisingly, as much as I want to say that financial advisors are worthless in the age of AI, after a much deeper thought, the answer is no.
I thought you would have stopped there.
Yeah.
I thought, just to add on to Chris, because I think how day-to-day people are using AI, that's a great point, because I was looking at how many people actually has an AI subscription. AI has been around since 2022. It's only 2%. Within the US, right? Within the US, only 2%. So a lot of people, they are not immersed in all these tools yet. And whatever prompt they're going to type, unless you use it on a daily basis, it is not going to be good enough to replace anything.
Okay. So maybe then I push that question a little bit, right? So you start to see a lot of digital platforms professing their own AI. Right, like we're not talking about like AI, like an LLM that you use that built on, right? We're talking about like brokers, robo advisories and all that. They integrate some sort of it. Everybody has an AI these days, right? Yeah. So like, what do you think of those things? And like, does it really like make the retail investors better? Like how would you tell people?
Okay, I think the best way is to really understand how these things work. And because they're not willing to reveal to me the kind of agents they use on the back end, right? Now, a very simple system can be built using a researcher agent, an analyst agent, put a human into the loop, and then after that, you've got your report generating kind of agents, right? These can be done with 3 or 4 drag and drop elements if you are an engineer and you're trained, right? So if the broker thinks that by doing this, you're going to be able to distinguish yourself from all the other brokers, I think that they are extremely naive because there will be power users who can figure out how to do that on their own, right? Then the next question is, can the broker enrich it with their own data sources? Maybe there might be some competitive advantage over there, but remember, Yahoo Finance is free, right? Yeah, so I really think that at the end of the day, the brokers are all just going to have all these AI tools, but maybe, right, one smart broker will decide that maybe I have a different way of educating my customers. Maybe they can get more turnover and more trades. Of course, I'm selfish for saying this because I'm in the field of financial education.
Yeah, of course.
Right?
Of
Yeah.
course.
So
You have your biases,
right,
you know,
so,
but I think that is
yeah.
a fair.
Yeah.
Yeah, because I do feel, you know, like it's a bit of a, like, you just slap on an AI, right? A random
Yeah.
bunch of things in there. It's like, you really gotta trust that. You don't even know what's behind it.
Yeah.
Yeah. Okay, yeah. Any thoughts on
I think
that?
for a lot of investors, especially when it comes to their brokerage account, less is more. And you know, the incentive of the brokerage fund is to always increase touch point, increase contact point, whether it's through gamification or coming up with forums inside, getting a lot of content, celebrating, so on and so forth, is to get people to go on there and do more and more. I think, and what AI is dangerous for a lot of retail investors is because AI sound extremely confident and very articulate. Is it good or not? That's a separate issue. But it's going to sound like it knows every single thing. And it's going to make you feel extra confident. And you may do a lot of stupid shit, in that process.
Yeah. Recently, I was judging a policy competition, and then the AI-ness I see come out from the policy from the students is quite serious. And everybody think they know what they are talking about. Right. Okay, fair. So I think that was a great conversation, and I'm sure like there's a lot more that we can go in from a technical standpoint. So maybe we should organize a session, with everybody come together and learn from Chris.
Yeah, get a software engineer.
We should play. We should do something. I think that would be quite fun, But before that happens, if you like it, put in the comment section. Okay, we'll see how that comes along. But before that happens, I think maybe in closing we can talk a little bit about like some best practices, for our audience when they use it. Maybe less from you because yours is quite cheap, But please, you start first. Yeah.
Okay, maybe I start first I only have something to say, right? Don't stop at prompt engineering. Understand how a skills file is being built. Go read up on it. Learn how to build one. All right. Then learn how people do prompt training, right? And hopefully, I think that will get you above 90% of the Singapore population.
Okay.
Yeah.
Great. Yeah. And
have a paid subscription. Don't just stay at the free one.
Don't like that. Don't give me some blanket statement.
You pay you pay a little bit, you get so much power. Whatever
Thomas
we are
right.
paying today
Thomas is right.
is not enough to cover their costs. In fact, the more sales they make, the more money they burn. So, this is a golden period whereby we get to, get ourselves tooled up, train ourselves with this kind of tool at the expense of all this LLM right now. And, like what Chris mentioned, the more you use, the better it's going to get. So you want to start today. Compounding not just happen at the portfolio level. It also happen at the AI. The more we feed it, the better it's going to become. And that's where the ROI is going to come.
Yeah. Okay, fair. Thank you all. Appreciate your time. You don't have to agree with them. You can score them in the comment section. But I think it is an evolving discussion. And I think a lot of us are looking at the capabilities, ultimately trying to see whether we can trust some of these decisions. And then I think even the governance are coming in to explore, like at what point must a human come in on these things okay? So AI is an evolving discussion as much as it is in retail. I hope you enjoyed today's discussion about whether AI can empower you to become a better retail investors. Okay, so thank you, bro.
Thank you.
We hope to see you again. Yes, we'll do at the book launch. Hope to do more content together. So if you enjoyed today's episode, please head to thefinancialcoconut.com to put your email address so that we can reach you the next round when we organize an event. Hopefully it's a coding program on how to do these things, So if you like, put in a comment, we'll get down to it. Okay, meanwhile, take care. We'll see you next week with Choose the TFC. Bye-bye.
Bye-bye.